Good afternoon, traders. Good afternoon. Welcome to Paul's Monday Market Update number 215 for Monday, 23rd of February, 2026. We return after the week away. I hope you had a good bit of time off. I was fortunate enough to spend a couple of glorious days up in Northumberland on the coastline there. It was good for the soul. But it's great to be back. And of course, there's lots going on. As always, if you're joining us for the first time, okay, the Paul's Monday Market Update is literally just that. It is me flying through as much as I can cover in the next sort of 25, 30 minutes, taking a look at strength and weakness within the FX indices and commodities markets, a look at some charts of interest to add to your watch list, and then a look at the live markets. It is not a signal service. There are no trade recommendations. I'm just sharing what I'm looking at, which might be of relevance and of help and support to yourselves. As always, you're always very welcome here, but just remember that you're always responsible for your own trading decisions. And if you want a bit more education, okay, or support, I'll be delivering the Active Trades Monday Market Matters webinar at 2 o'clock, okay, this afternoon. The educational element will focus on simple risk management. So you can sign up for that on the Active Trades website, or that QR code should take you there. And if you want a bit of help and support for your own trading, there is the VTP Trader Accountability Group that is running. That's basically just helping you, regardless of how you trade or what you trade. It is about being part of a small group that helps build discipline, accountability, and consistency in your trading endeavors. If you want more information, you can ping me, or there's a bit.ly code there, or there's a QR code that will take you to a page that will give you a bit more insight. Right. Okay. Let's have a look at what the markets are telling us. So, if you're new to trading or new to joining us, I appreciate this might look maybe a little bit overwhelming, but it's not meant to be. It's just some clips from the work I do at the weekend myself. And what you'll find is that basically it's weekend work that I do, just looking to identify where's the strength and the strength and weakness and trends and momentum in the FX indices and commodities markets. So, what is this telling us? What is actually giving us insight into how does this actually help us? So here we are. We are into week 9 of the year, ladies and gentlemen. Right, for the 23rd of February. Where's the strength and where's the weakness? Well, Aussie still remains okay, top of the pile as it has done all the way through 2026. Along with that, Swiss franc. Okay, Swiss franc has been in second place for pretty much most of the year so far. Looking on the flip side, okay, where's the weakness? Well, not unsurprisingly, US dollar remains top of the pile, and I don't think that's going to change massively. Certainly after what we've seen over the weekend, okay, with the let's call it the sort of once again the sort of Trump tariff tirades that have occurred over the weekend, and basically ended up with Mr. Trump putting a pretty much blanket 15% tariff across everybody coming into the start of this week, and that naturally has had an impact on markets, and we'll look at that more in a moment. So that has weakened the dollar, okay, as we were starting off the session, but I suspect what we're going to do is we're going to see a fair bit of volatility today and tomorrow as we get the sort of tit for tat. Joining the US at the bottom of the pile is sterling. Okay, sterling has basically slumped there into sort of the bottom of half of the STAM from where it was pretty high just at the start of this year. Those of you who join us on the regular basis will know that that is not a complete shock. All right, I've been talking about that for a good while now. Okay, that sterling's been weakened and had just been held up by dollar weakness and yen weakness, but we can see that yen is starting to strengthen a little bit. What another thing we've talked about this year, and also you have got the let's call it the sort of political sentiment, right, of all of the sort of nonsense that is going on in the UK, just domestically in terms of basically politics as well. All of that is weighing upon sterling, and hence no surprise to see that we've kind of slumped down into the bottom of the pile. It shouldn't really be a massive shock. And that is confirmed when I look at the sort of the particular sort of sterling pairs that I look to trade myself, and pretty much all of them, all right, have now gone into selling environments. Okay, whereas we started the year with a bit of a mix, some of them in buying, okay, some of them in selling. Now, pretty much everything, all right, pretty much everything is in a selling environment. That's just implicating the kind of weakness in sterling, and you can see how that has kind of grown this year as we've gone on. But as I said, if you've joined us this year, okay, you'll know I've been talking about how that's pretty much coming, along the way, that kind of weakness. And also, even if I look at euro, okay, even though euro's middle of the pile there, what we are still seeing is that there is weakness there, okay, in terms of the sort of most of the euro pairs are also in a selling environment as well. Who's benefited from that? Well, as we said, Japanese yen has kind of nudged its way up a little bit higher. Kiwi dollar remains in third, and Canadian dollar has had a little bit of a bump there. Now, whether that's because we've seen a bump in oil, and we've seen a bump in oil because of sort of increasing rhetoric and talk about President Trump looking to strike Iran. Okay, some people thought it would have been over this weekend. Some people might think it's over this week, etc. Naturally, that will have an impact on the Canadian dollar through the price in oil. Certainly, as I said, if we look at where we started off this, in the kind of since we opened last night, it's actually been sort of a bit mixed, really, a little bit mixed. Okay, and we'll look at the dollar, of course, in a moment when we switch across to the live markets. But of course, there's been quite a few swings there, and I think this week we've got, well, we don't really get any kind of major formal US data until we start to see into sort of Wednesday. But we've got this afternoon, well, in fact, in about 20 odd minutes, we've got the FOMC member Waller. He's going to be speaking. Trump is not supposed to speak until Wednesday, but I don't think that will happen. In terms of, I think he'll be looking to basically talk either today or tomorrow, based upon the kind of reactions to the sort of the new tariffs. And other than that, it is a relatively quiet week in terms of formal economic data coming out. Okay, it's getting towards the end of the month, so no real surprise there. But as I said, I think it'll all be overshadowed by the kind of the new tariffs, B, the sort of increasing rhetoric about the likelihood and possibility of strikes on Iran. You might also even want to throw in some of the kind of shenanigans that were going on in Mexico over the last 24 hours as well. It has certainly been an eventful 2026 to the start of that. All of those things having an impact on dollar. What we've also got this week, as well, as we look at, I'm going to go across to the sort of indices and commodities. Well, NASDAQ has already gone into a tactical short, all right? That's into a tactical short environment by its own model there, okay? From where, if those of you joined us regularly, I talked about maybe a month ago and stuff about how it was pretty much all green. And it was almost like markets get giddy and green before they blow up. Literally and figuratively, in the case of some of those defense firms. But what we're starting to see there is the momentum has gone bearish at the moment. As I said, NASDAQ's already into a tactical short environment. And of course, we have quite a few major earnings reports this week. Okay, I'm going to look at some of those charts in a moment. But of course, the big one is going to be Nvidia. All right, Nvidia's on Wednesday night after the close. That is going to be, it's the bellwether for Nasdaq, for markets, for AI, for just overall sentiment. Okay, so everybody's going to be sort of waiting with bated breath to see whether Nvidia puts out good numbers that gets the party going again, or whether it's a kind of a bit of a takes the wind out of the sail. So naturally, everybody's going to be looking and waiting for that. But as I said, NASDAQ's already gone there, tactical short. Oil is a strategic buy, as we'll look at the moment. No surprise there, based upon the geopolitics. Bitcoin remains a strategic sell at the moment. Okay, so we'll look at that in a moment. The sort of the weekly candles are getting a little smaller, but it still remains kind of on the sort of on a downward trajectory, and that's what's given us that sort of strategic sell signal there at the moment. So Not much formal economic data, but lots going on from geopolitically. Okay, and invariably Trump is going to be sort of talking a lot about his interpretation of his kind of his new tariff regulations and the kind of effect that is going to have upon markets. So not unsurprisingly, you're going to hear me say that make sure you keep on top of the news flow, the order flow, and the make sure you're managing risk because I think, as I said, I think things will be volatile and swing about certainly over the next 48 hours as we start to sort of see what the score is with that. All right, so if you just bear with me a minute, what we'll do is we'll start to switch across to the live charts and we'll start to take a look at some of the charts of interest that you might want to add to your watch list. So just bear with me a moment and we'll switch across. Okay. So I'm hoping that you can still hear me and that you can see the charts. This is a weekly chart of EM, okay, the Emerging Markets Index. All right. So um, why is this of interest? Well, what's this relevant? Well, of course, naturally, we've had tariff talk for nearly a year now, haven't we, in one form or another? But the acceleration of it over the weekend just adds to the kind of overall sentiment and trajectory of certain indexes and certain sort of instruments. And of course, people will be looking at the impact that it has upon the US dollar. But one of the other things, of course, is the emerging markets, all right? And as you can probably see here, what we had, let's bring up the old drawing tool here. This is a weekly chart. Okay, my charts was pretty simple. Weekly charts, okay, candles, blue 20 period moving average, red 50, green 200, and fractals, kind of simple as it can be. If we look here, okay, come on, bring up the old drawing tool there. All right, if we look up here from where we started, the kind of the sort of Trump tariff tirades, well, it had an impact upon the US dollar. It basically weakened US dollar for most of this last year. And of course, naturally, that has also had a huge impact, okay, positively on overall emerging markets. So, as a general rule, we see these kind of be kind of an inverse relationship between them, all right? When dollar's strong, the emerging markets gets hit and vice versa. And that's what we're seeing here. And it's been quite some trend there, hasn't it? Quite some trend on the weekly chart over the last year. And it kind of, I look at this to help me sort of just build an overall picture, right? I trade a lot of the dollar. So anything that helps me build a picture to understand the kind of the sort of the sentiment and the trend and the trajectory, anything that helps me, I do that. And we will look at the dollar in a moment anyway. But you can see for yourself there that that has that huge impact. And what you've got is that invariably, these tariffs, whatever level they are, whatever they are, they have an impact on these on the kind of global economy. But of course, some of them will have more than others. And as I said, EM it's kind of sensitive to the direction of the US dollar, but also the kind of real yields out of the EAS. So if you're getting a softer dollar, that generally, as you can see, tends to be a tailwind for flows into the emerging markets. And of course, what we see increasingly is that it's weighting towards China. That kind of remains the sort of dominant driver. And so stimulus, whether that be in the US or China, that sometimes distorts kind of the short-term price action. But what we're also seeing is that you're also, in this case, getting commodity exposure. So things like, Brazil, South Africa, etc. And that kind of links performance to the sort of metals and the energy cycle. And of course, certainly in the metals, we have seen for the most part, a really strong bullish trend over the last year. Despite of the kind of price action of the last month or so. So, what do you need to be aware of? Well, it's kind of if those US yields, if they roll over and the US dollar continues to weaken, then what you see is this kind of emerging markets kind of can accelerate quickly. But if there is a flip and any kind of renewed strength in US dollar, well then that acts as a bit of a fast headwind. The way I look at this is that has been a great trend, but what I'd also be saying is that price is starting to go parabolic and it's pulling away from the moving averages here. And so, nothing can go vertical for long. So I'll be watching to see how this plays out. But definitely at the moment, that is just confirming that sort of dollar weakness story. Okay, here we go. Nvidia. So as I said, listen, every man and his dog covers Nvidia, but it is the week of their earnings, and as I said, it is kind of the well, it's pretty much a bellwether for everything these days, isn't it? It's a bellwether for the health of the Nasdaq, for the health of the overall markets, for the health of a kind of AI capex, for health of a kind of the software story, etc. It's become the kind of its spending guidance drives the narrative. All right, so um, based upon what they're looking to achieve, okay, in terms of the revenues they're bringing in, but also where and how they're spending it. All right, so that is a bigger, deeper, longer story about the kind of what some might call as a bit of an AI circle jerk in terms of the way the money is kind of flowing into a loop. But there are people, brighter and smarter who can explain that better than I can. Ultimately, I'm a trader just looking here at the charts, trying to see what's the opportunity. So what I look at this when I look at here on the chart, let's get the old drawing tool, is that, yep, not unsurprisingly, you had last year's tariff Trump tirades, as we saw. Bang, Nvidia did well out of it. We got up to $200 here, but we really kind of, we kind of rejected it pretty strongly, and I would look at this at the moment as kind of, it's a little bit of a head and shoulders pattern there. Excuse my artistry, as I say every week. I'm a better trader than I am an artist, but hopefully you get the gist there. And I'd be looking at, say, well, okay, at the moment that could quite easily be a head and shoulders pattern. And if the numbers on Wednesday night were woeful, well, then I'd be looking for for a break and a drop down to certainly to the 50 around about 165, and then back into this kind of block here at sort of 150. That's what it would be if the numbers are poor. If the numbers are good, well, it has to assault 200, I think. Well, it doesn't have to, but that's what I'd be looking at in terms of it needs to get above 200 and close and stay above 200. That is immensely bullish, and I think if that were to happen, well, then invariably the whole, as I said, the whole market sort of follows that at the moment. So you could say that it's not really done much really for in sort of 2026. Okay, really has it? You might say it's just mostly just basically been coiling up there. Okay, pivoting around that blue 20 period moving average, and maybe Wednesdays is the catalyst for the next move. Okay, and of course, where Nvidia goes, everything else does. That's why people are going to be watching it like a hawk. Okay, another tech company, Palantir. So I think we covered this a few weeks ago on the Monday Market Update, but it is A, the price actions of interest, and B, Palantir is, how can I say, it's kind of transcending just a tech stock, because now what we are seeing, of course, is that it is being involved in all sorts of, let's say, domestic shenanigans. Certainly here in the UK, there is increased talk about how this Israeli technology company managed to sort of embed itself into both, the US military, but also like close to home, the NHS, the Ministry of Defence, etc. So there is increased scrutiny on the company, etc. And as I said, I think that is one contributory element to why we have seen this move lower, all right, over the last few weeks. As I said, when we looked at it, I think a couple of weeks ago, it was still in a great trend, pushing higher. Once again, it got to $200 and then printed this real kind of big bearish engulfing, bearish key reversal candle there, right? And then, once we'd seen us push back up, but we couldn't go higher. We couldn't even make 200. No surprise to see that we kind of rolled over. And, once again, you might say it's not a pretty or classical head and shoulders, but you might say, well, yeah, there is something happening there. I think we were kind of interested to see, well, would 150 and the weekly 50 period moving average hold as it did, what's that, about a couple of years ago, 18 months ago? But of course, as you can see, it hasn't. All right, it hasn't. So now I'd be saying you're looking at around about $120. That's what I'd be sort of viewing. And of course, naturally after that, if it continues, that then invariably, you're looking at the big round number of $100. So that is very much in a bearish trend. I wonder, as always, whether it could pop north back to 150 and then basically get into a sort of into an area here, where it rejects around that kind of 150 before down to 120, down to 100. That would be my continuation of the short run. That would be the kind of the way it looks. So, as I said, it's no longer just it's no longer sort of just a tech name. It is basically it's transcending that and it's getting into the sort of domestic news story and not for good reasons. So yeah, I'd kind of it's there's a momentum there at the moment. That momentum's bearish, hence why you might get a sharp retrace, and that might give me an opportunity to short again if we kind of work with that. Okay, another technology company of a sort. This is RKLB, Rocket Labs. They themselves, they've got their earnings on Thursday after close. I've been interested in these guys for some while. Okay, not unsurprisingly. Okay, they are as the name implies, they are into space launch. All right, so they are into the kind of let's say commercialization of space, but also they have a defense crossover. Okay, and that basically, of course, is increasingly attractive in the kind of current defense cycle we have. They had tests of kind of new engines. I think it's called the Neutron engine and stuff, which seems to have gone well, but there'll be people smarter than me who can explain that better. Really, once again, I'm just looking at the price action here and you're looking to see if there's opportunity. And it might be said at times the price on here has been like a bit of a rocket launch. The thing you've got to remember with these guys is that we're at the start of this kind of journey, so it's a very capital intensive model, and it is all about execution risk. If you remember when basically Musk was starting Space Labs, there was lots of interest or space labs. There's lots of interest in the kind of launch of his rockets, but kind of any failure is you can't escape that. You can't avoid that. You can't hide from that, and that kind of damages sentiment pretty quickly. So. Yeah, so that is something we've got to take into account here. But I've taken an interest in these for quite some time. Once again, around the kind of Trump tariff, we kind of pulled back to the 50. Yeah, I think I was around about $18. My first exposure, and then we've run higher. Okay, we've had steep retraces, and yeah, I think I talked about this a couple of months ago about how I've been trying to get in at 14 and couldn't, and then of course it rallied all the way to 100. So which is enough just to upset you. But once again, we've had that steep retrace here, and we're here around about $70. Okay, which I'm trying to see, is that going to be resistance turning to support? We've also got the weekly 20, which it's managing to hold above. Are the numbers good? No, if the numbers are good on Thursday, well, is that another case of basically pushing it back towards 100? That's what I'd be looking at. Or if the numbers are poor, or the kind of sentiment is weak, well then that kind of breaking that weekly 20, breaking sort of not being able to get back up above 70, well then you're looking, I'd say, down into the kind of 50 region and stuff. So it's going to be an interesting one to keep an eye on. As I said, I watch it. I'm fascinated by it. But like all of these stories, you can see it's a pretty volatile story. Okay, a very volatile story. So you have to be prepared for all sorts of swings. All right, something a bit, let's say, a bit more earthbound, okay, and a bit more dull. Many might say Domino's Pizza. They have got their earnings. Well, now I think it's about now out of the there we go, out of the um, pre-market. Okay, so Domino's Pizza weekly chart here. I think we talked about this a good while back. We looked at this how it had been a great run up here, okay, up to $500 with a really nice double top reversal here, and then we just collapsed our way down here, collapsed our way down to $400, and $400 has been a pretty significant sport, and for a good while we were in that kind of $400 to $500 range. But what we saw was here is that, when we bounced the last time from the 400 area, we didn't go as high. We couldn't really get above the 20. And, you can see prices now, happily beneath that 400. Now, what you're going to be looking for, if we look at here, the pre-market number is pretty significant. I'm expecting to see that the numbers are pretty good, all right, and that basically that is going to just basically drive buying back up above the $400 and the 200 period moving average number. That's what you can see. One of the reasons I'm interested in of course, this is it's almost like a proxy for the consumer resilience, I'd say both here and in the US. And you're looking at, are they able to increase sales at a time when my suggestion would be is that people are reining in their spending, especially sort of, spending on kind of discretionary environments. So, do they kind of have the loyalty, if people are loyal to Domino's Pizza, to get them through? And are they able to manage the kind of labor costs and food inflation prices, etc.? So, that's why it kind of interested me, because you're right. We might just be talking about pizzas, but actually, it's giving us insight into a whole other area of the environment of the market. Okay, so you know, um, what I'd be thinking there is like, if kind of consumer data weakens, well, then you'd expect sort of defensive food names like these guys to outperform. But it's whether they can basically, as I said, whether they can maintain margin when you've got increasing labour costs and inflation in food prices. So it'd be interesting to see how these guys play out this week. Right? Does it get back up above 400 and the 200 and hold? In which case, well, then that would be bullish up to about 430. That's what I'd be looking at there. Final one here, okay, before we look at the live markets, BWXT Technology, BWX. Another one, a bit like Rocket Lab, that have been on my kind of radar for about a year or so now. Kind of the whole link into the defense cycle, but also energy, and in particular nuclear. So that's what they're particularly looking at. That there are people smarter than me who can explain exactly what they're bringing to the party. But they are, as I said, they're exposed to sort of defense, and they're exposed to energy, and in particular nuclear. So and so they are benefiting from the kind of, let's say, the sort of reallocation towards energy and defense, and that's what's happened. So also they've kind of benefited a bit from the basically the sort of the long duration government contracts that helps them with it, and they're reporting after close today, etc. And what I'm curious about is, once again, we had a great buying opportunity over the original tariffs, and we pushed our way out, and we pushed up to 200. I'm kind of curious now, is this a bit of a double top here? Is this kind of, people sort of, if they have their joy, are they running out of that joy, and then basically, looking to see whether they'll be taking profits and dropping us beneath 200? I'd suggest if the numbers this evening are weak, well then, sub 200, sub that 20 period moving average is kind of bearish to me down towards this support trend line. If the numbers are good, if that overall kind of sentiment, maintains the kind of the bullishness, well then, naturally, I want to see us finish this week holding above $200. To me, that would be to me that would be bullish. So once again, a bit like Rocket Lab, bit volatile, but perhaps less volatile than a pure defense play. And there is a bit of a tailwind, okay, because of energy and nuclear. And so, it might well be that this is another little pullback that might get the opportunity to buy. So you might want to add that to your watch list, see how that plays out this week. Okay, there you go. Some charts of interest there, quite a few more than expected, but there's a lot going on at the moment, and I appreciate I haven't been we missed last week. So let us switch across to the live markets and see what's going on there. So just bear with me for a moment, and that's what we'll do. Boom, boom. Okay, so let me just check that everybody can still see and hear. Yeah. Okay, so you hopefully should be able to now see profile here. I've got Dow on the weekly, Nasdaq on the weekly. Come on, Paul. Let's clear all these and make it nice and clear for everybody. Yeah, Dow on the weekly, Nasdaq on the weekly, S&P 500, Russell on the weekly, FTSE 100, Nikkei, DAX, and the oil. Okay, as I said, if you look at that, bang, oil, US oil there from what's that, about 56 up to 66. Okay, so real kind of reversal there, and as I was saying, that is an impact that on sort of geopolitical and other elements going on there. Okay, so but that itself has a knock-on impact. When we start to look at some of these indices, well, if we look at Nasdaq, we've talked about Nasdaq here for a while, haven't we? How that, whereas the others have kind of pushed their way to new highs, that has not been the case. You might say that is a very kind of almost like lazy double top there, but certainly the last few weeks we're beneath that 20 period moving average. which we haven't been for bang until sort of, May last year. Now, as I said, is this going to be the case of Nvidia is going to bail everybody out? Is Nvidia going to bail us everybody out? Which case, if the numbers are good, we push to the highs. If they're not, well, I think we drop to the 50. I like that. That would be my kind of into that sort of 24,000 area. That would be my kind of view on Nasdaq at the moment. But even if we look at S&P 500, having pushed to 7,000, you might say, some might say, well, Paul, we were kind of caught up a little bit here. This is not, let me just draw this in. Let's go down to the dailies here. People might be saying, well, Paul, bang, are we coiling up here? All right. Are we coiling up here? And, do we have the energy to push up above 7,000? Right? Are the numbers going to be good enough that it pushes us up, or does it rub pull and we take a bit of a leg lower? So we're kind of right at a decision point. I would suggest even Dow, having pushed to 50,000, it has come away from there. Okay, it's come away from there on the daily, and on the daily here on the Dow, I'd be watching the 50 period moving average. It's acted as great support here. Okay, in the last couple of months in 2026. Will it continue to do so? All right. Are we gonna get like literally squeezed between 50,000 and the 50 period moving average? All right. Watch to see that squeeze and let that show me the way. No such issues with the FTSE. FTSE continues to push in spite of all the nonsense. Now, I think last week, we had a good week. A lot of that is to do, I personally, I think, with the kind of sterling weakening. All right, okay, a lot of that just basically, sterling weakening and 80% of those FTSE 100 companies getting profits in foreign currencies. It just basically means that those profit numbers for FTSE 100 companies, are better, and so that has been a continuing trend. All right, and that's the way that's working out. If you look at DAX, DAX hasn't been doing that. We broke out of this range for say the latter half of 2025. We came back and tested it, but we've not exactly sort of launched ourselves forward. Now, what I would say is that the underlying tone of the German economy, in spite of all the madness that's gone on there with their energy, the economy is starting to sort of nudge its way in the right direction after a couple of years of going nowhere. And so I'll be interested to see, does that play its way out into the DAX itself? The DAX has been carried up here by defense companies, etc. But does it have what it takes to keep it going in that sense? I'd be fascinated to see can it do that. Looking a little bit at some of the here we go. Some of the kind of the commodities. Well, gold weekly chart. It's still holding above 5,000. It's still got that uncertainty trade all about it. Right? The uncertainty trade is still grinding its way up there. Okay, after all of these shenanigans, it's still grinding its way up there. If I look at silver in the weekly chart, having kind of collapsed there and pivoted around 80 once again, it's kind of working its way. It's grinding its way up there. That's that kind of tariffs, uncertainty, Iran, etc. It's all playing into its part there. And whilst it does that, Bitcoin, as we said, Bitcoin is a strategic sell. As I was saying, if I look at the candles, they're getting smaller. From the big sell-off candles here, we are getting smaller. So keep an eye on that, right? But we're still holding beneath 70,000. If you look at the daily chart, the last couple of weeks have not been terribly exciting. But is that just a case of we're starting to base? All right, is that a case of building a stage one base? So, just watch that and see how that plays out this particular week. And then invariably, with that, we want to have a look at how that impacts the dollar. So for today, I'm just going to look at the dollar and finish on sterling again because I appreciate we've ran over a bit, but that's just because there's lots of charts of interest to share with you. This is dollar profile. Aussie dollar, euro dollar, pound dollar, dollar Swiss, Kiwi dollar, dollar CAD, dollar yen, dollar index. All right. So I have a dollar profile, see what the score is. As always, invariably what we're kind of looking at is, the trend. All right. Let me just draw this in. Weekly chart. You might say, well, Paul, really, we've been in a kind of chain mode. Sorry, my drawing isn't fantastic, but you get the gist, hopefully. We've been in there, okay. We flushed these lows of last year, and we kind of, we popped a little bit, all right. The interesting thing is that I was talking about this here. That was the flush of the lows. We then formed this. This is a dime, what I've called diamonds, which is basically a high low, and we worked our way up to the 50, and then you can see what's gone on over the last sort of few hours. Right. If you look at this in the 4-hour chart, we kind of 4-hour chart. We double topped the off the daily 50 at the end of last week. We gapped down, but actually, we've come back in, and this is why. I was looking at the dollar here to sort of trade it this morning, but just waiting to see how it, A, could it fill the gap? B, how does it open once Wallace speaks, and then once the market opens, all right, and then just keep it quiet on that. If you look at that, that is kind of it's come back strong there, that dollar there, hasn't it? It's come back strong, but just the way that's particularly played out. And so, then I'm looking at, well, all right, what's the story here? I mean, if we remember, Aussie's been top of the STAM, it's the strongest currency, but even I'd say that over the last couple of weeks, having had some fantastic runs, to me, that doesn't look terribly strong to me, does it? The last couple of weeks have gone sideways, right? Even with all dollar weakness or supposed dollar weakness, and I wonder whether we're just coming to the end of that story there. Okay, whether there's basically getting ready for another shift with that. Because when I look at euro dollar, having pumped, all right, bang, we've got the pump up there to 120. That was all the Greenland. If you look at it since then, we've kind of drifted our way back down. Here we are at the 50. All right, we're here with the 50, at the 20 and price. And you know what? So when I see price and the moving averages all getting wrapped up, I'm expecting some sort of move. So maybe Trump comes out and says something this week that basically has an impact upon that. All right, but certainly the initial shock of selling a dollar it hasn't followed through. So as I said, let's see how the how the American markets open, and B, what they have to say in terms of Trump, because I'm sure he's going to come out and talk about it. All right, and let's finish with sterling. Okay, so bang, this is my sterling profile here. So I've got cable on the 4-hour, euro sterling, pound Aussie, pound Canadian, pound yen, pound Swiss, pound Kiwi, FTSE. So we've just looked at how that kind of we've had basically the moves here in here we go. Cable on the daily, even though we pumped up, kind of had a Greenland pump, it has invariably fallen away. On the 50, if you look at that, sorry, in the daily, we're above the 200, but beneath the 50, we're kind of caught in a little bit of crosshairs there, right? And as I said, to me, that looks like it's coiling up, and I think we're going to have to wait and see what Trump has to say to see whether what that has impact that has on the sort of the dollar itself, all right, and the sterling will reflect that. Euro sterling on the daily chart, having been in a kind of downtrend for a couple of 3 months, you can see that basically we put in this beautiful daily bullish key reversal, and we've popped up, and that has just been sterling weakness in February, and that is a mixture of the kind of the numbers out of the UK and also the sort of domestic shenanigans that are clearly going on. And that's the thing. If we look at pound against yen last few weeks, not much to get excited about. Pound against Swiss franc that's the last few days. But even the if we look at the kind of pound Aussie, pound Kiwi, none of them are terribly excited at the moment. Okay, those are the 4-hour charts, but none of them are terribly exciting. It's pretty much sterling is kind of drifting, all right, and there's no real strength or appetite for it at all. And certainly this morning, even this morning on the intraday trading of it, it was just kind of a bit anemic. Okay, not much going on. Everybody sort of just basically trying to sort of assess and reposition themselves based upon what Trump and the tariffs and the dollar will do. All right, ladies and gentlemen, let's draw it to a close there. Okay, I appreciate we overran a bit there, but lots of stocks to talk about. Having been away for a while, it is going to be an interesting week. I hope that's given you a little bit of help, a little bit of insight that you can utilize in your own trading. As I said at the start, make sure you're on top of the news flow, the order flow, and your risk management this week, because there's invariably going to be a volatile week ahead. Have yourself a fabulous trading week, everybody, and I look forward to speaking to you soon. Take care. Cheers.